Switching gears here, everyone. PayPal taking a deeper dive into the cryptocurrency space with its own US dollar-backed stablecoin. Customers will be able to use the new PYUSD to purchase products, send from person to person, transfer to other wallets, and they can also be converted to or from other cryptocurrencies that PayPal supports. So could PayPal's entrance into the space lend it some more legitimacy? Joining us now, we've got Brendan Peterson, Punchbowl News financial services reporter. Brendan, great to see you as always here. So help us break this down just a little bit more and PayPal's new foray into its own digital currency.
Thanks for having me, Brad. Yeah, I mean, the big deal here is PayPal itself. I think there's a lot of stablecoins out there, but as far as new entrants goes, there are few fintech companies that are more ubiquitous than PayPal. So having that exposure to a stablecoin-like product for a lot of consumers is going to be significant. Now, that said, there are a lot of obstacles here towards widespread adoption, right? Most vendors at this point do not accept stablecoins. So even if you are, buying a bunch of PayPal's stablecoin at USD, you're going to have to convert it back to that fiat currency most of the time when you actually use it. Now, that could change at some point, but the big thing that we are tracking here in Washington is going to be the role of FedNow. That's the instant payment system that the Federal Reserve has been trying to stand up for a long time and actually launched last month with just a handful of banks. If a lot more banks take that up in the next couple of years, we could see a much lower demand for stablecoins, the type of product that PayPal is pushing right now. But if the government can't get that adoption, it may be up to private actors like PayPal to make that happen.
Brendan, I have to plead some ignorance on this, as I have ever since the concept of stablecoin was introduced and explained to me. Why? Like, what does this do for PayPal or PayPal users? Or like, what is it for? I don't quite understand it, I have to admit.
That's a great question. I mean, one thing that you will hear from a lot of policymakers specifically is they will, instead of just saying stablecoins, they will say payment stablecoins or dollar tokens. That kind of gets at the core function of this thing. For a lot of people, let me say this, for a lot of people, stablecoins are just another speculative investment.
I mean, we have the dollar already, right?
Correct. But I'll say this, the dollar is not instantaneous, right? Like the slowness of our payment system is behind most other peer countries around the world. And so when you're looking at Mexico has had an instant payment system for decades. Brazil's stood up one pretty quickly in the last decade or so. The UK has one. We are behind on this. Stablecoins are a private way to get instant payments, right? We don't have that at the government level. If we did, you don't need a private sector solution if getting faster payments is really important. And for a lot of people, I should say, faster payments are really important. If you are living paycheck to paycheck and you are waiting for a check to clear on a Friday, you might not get it, depending on how slow your bank is, and you might not be able to pay your bills. So there's definitely an economic case for this, particularly for low-income people. But it's until there's one company that comes along that has a significant amount of scale that can pull this together, or the federal government steps in and has a more functional product, we're not going to really know what this product can do.
Has sentiment recovered enough around stablecoins right now, Brendan? I mean, we've come a long way, many years from PayPal's intentions to even be part of the Libra consortium, and now they're launching their own digital currency. This one is with Paxos, I believe, and so this, of course, also still comes after much of the algorithmic stablecoin kind of debacle that ensued. So has stablecoin sentiment rebounded well enough?
I think it depends on who you ask. I think in general, yes. There is at least widespread expectation or anticipation from policymakers in DC that we need to do something about stablecoins. There is a fair amount of systemic risk that can get attached to a large enough stablecoin because you're talking about the creation of private money, and that can create funky things in an economy when it's not controlled by a centralized authority like the Fed. With that said, Republicans in the House are pushing really hard on stablecoin legislation. They just cleared a package through a markup on the House Financial Services Committee that would introduce first of its kind stablecoin regulations, and that had some, although not all, of the committee's Democrats supporting it as well. About 7 Democrats out of 20-something supported that bill. So in terms of acceptance, we're getting there. But I think to Julie's earlier point, the question really is like, what is this for? And are people going to bother to go through all these hoops to figure out how exactly to deploy a stable coin and how to convert it back and forth when all you're ultimately getting is money a couple days early?
Brendan, thank you so much. Brendan Peterson, Punchbowl News, financial services reporter. Good to catch up with you.